Hey everybody, back with another dividend analysis, and today we're going to be looking at Southern Copper Corporation, or SCCO. Wanted to look at SCCO because I was looking at them previously and they were kind of interesting, so I thought I would share it with you all. As usual, we can start by looking at the dividend yield, which is currently at about 5.7%. This is slightly misleading, but I'll talk about that later a little bit when we look at the dividend history. But just note that at 5.7%, you are doing well over the average for the market. The S&P paying out around 1.5 to 2%. So you're doing 3 to 4 times what you would get if you were invested in just the wide market. Now, looking at that dividend history, we can see that previously, back in 2013, we were getting about 12 cents a share, while currently we're getting 90 cents a share. That is a very large increase, hundreds of percent. But if we look at the history, we can see that it becomes very spotty, going down all the way to 3 cents, then starting to jump back up. This company, its price, along with the dividend it pays out, will be dependent upon copper prices. And as we can see, copper prices are currently trading at an all-time high at about $4.50, even over that. Whereas back in, 2015, where we saw our drop in dividend, was the same time that copper prices dropped. So note that this dividend is going to change quarter to quarter very often, so that 5.7% yield could go up and down 1%, 2%, 3%, depending on what the dividend is. If copper prices stay high, that 90 cent, 70 cent, dollar dividend might be very stable. However, if those copper prices go back down to where they were, $2.50, $3, that dividend's going to take a hit, as will the stock price. So just keep that in mind. This is a commodity-based ticker. You have to keep track of the commodity to actually see how the ticker's going to do. But let's head over to the numbers and see if that current dividend is actually supported. We can see that over the last 12 months, they paid out about $1.3 billion in dividends. And let's see if that $1.3 billion was supported. Going over to the cash flow, we can see that in the last 12 months, they made about $2.4 billion in free cash flow. If we divide that, that gives us a ratio of 55%, not under our ideal range of 50%, but well within our acceptable range of 75%. So they have plenty of money on hand to pay out that dividend. Even if they took a little bit of a hit, went back down to $2 billion in free cash flow, they'd still be able to pay it. There is a little room for that dividend to go up. But again, remember, that's going to depend on the price of the commodity. Checking the free cash flow growth, we can see that there is growth over the last 5 and 10 years, going from 1.5 billion and 200 million up to 2.7 billion. But again, this is going to depend on the price of the commodity. We can see that when we had that big dip in copper prices down to about 250, our free cash flow went into the negative. So this is a company, again, negative free cash flow is very possible. This is going to, again, depend on the price of the commodity. I'm going to be saying that a lot. Going to sound like a broken record, but it's important if you're invested in something like this. You can't just track the ticker. Let's head over to income and see if they can pay for the dividend with that as well. We can see at $2.8 billion, they have plenty of money on hand to pay for that dividend, giving us a ratio of 47% under our ideal range. They could have paid twice the dividend and they'd still have money left over, even though it's just a little bit. Looking at the income, we can see it's a little bit more stable. They didn't go negative, but again, when copper prices dropped, their income dropped. Really looking flat over the last 10 years, just beating 2012's numbers this year with $2.8 billion. Otherwise, it was a downward back into an upward, a little bit of a bell curve, if you will. Again, that income's going to depend on those copper prices. So how are they making that money? How are they making that income? How are they making that free cash flow? As in their name, they are a copper producer. They also produce a few other minerals, silver, and a couple others that I really won't get into here because the list is extensive. But their main source of income is selling copper. So when those copper prices are high, like they are now, like they were in 2011, they're going to be making a lot of money. You're going to be getting most of your money from them through that dividend. This isn't going to grow the way the rest of the economy does because of being based on a commodity price. So you're going to want to look for places in the economy where that commodity price is going to skyrocket. Currently, copper, it's going to have two really big reasons pushing this price increase. One is going to be electric vehicles. The average electric car uses about 80 pounds of copper in it, mostly in the battery as well as the wiring. And with the big push for electric vehicles, copper is needed. It's just required to create those vehicles. The other thing is the whole infrastructure plan that's going on right now. If any of that goes through, copper is very important in infrastructure for piping, wiring, so on and so forth. So if you think that those two things are going to continue growing, continue coming into existence as they are, then investing in a commodity-based company like this could be a good idea for you. Just remember that, again, it's based on that commodity price. That is what is driving this income, what is driving that cash flow. So is this for you? What kind of investor should be looking for this? If you're a dividend appreciation investor, I would say stay away from this because of how spotty it is and the dependence on the commodity for that dividend. You cannot predict if this company is going to continue increasing its dividend the way you would for any other company. It just doesn't work that way because of its link to the commodity price. If you are an income investor, this presents a very interesting opportunity. If you want to be in the industrial side, in the mineral side, if you have a spot in your portfolio for that, if you want something that produces a metal but still gives you an income, this is something to look at. If you're someone like me and you don't like gold because you don't really see that as a hedge in any way, then moving into other metals, like something that produces copper and silver while providing you some kind of income, this could work for you in that way. There's always going to be a need for copper. Copper isn't going to go out of existence. It's just its properties make it it's the nice brown metal, the nice red metal, if you will. So if you're an income investor, this could definitely be a play for you. The only thing is that with something like this, there is a lot more research you have to do. There's a lot more day-to-day that you have to do. If I'm invested in a company like this with any significant amount of money, I'm checking the copper price at least every week, if not every day. If that's too much work for you, don't worry about it. But if you're looking for that industrial dividend, something that's a little different, something that lets you invest in a different kind of thing while giving you that cash flow, that personal cash flow in the form of a dividend, this might be something for you. If not, again, it's very spotty. It's very hard to keep track of the dividend because you have to keep track of copper prices. If that's too much work, don't worry about it. Not a big deal. But if you're looking for that specific thing that this covers, it could do very well for you. And I hope this helps, and thanks for watching.